Hello everybody, it's Larry East with your weekly bulletin for the week of January 28th. It was an interesting week in the market, so I'm going to jump right in. The week began with a temporary hold on the government shutdown, which hopefully is good news and we can keep the government open and rolling. Many financial reports have been withheld or not published due to the government being shut down. So it'll be interesting to see if we start getting these reports since the government is reopened and functioning. The big news this week was the Federal Reserve meeting. So the Federal Reserve does a two-day meeting, and at its conclusion they issue a policy statement and rate decision. This week, they decided not to increase the Fed funds rate, which was expected. What wasn't expected was how timid the Federal Reserve statement was. They were very mellow in their language about their further actions. They took out the lines about further rate increases and even opened up a little bit of a window for their balance sheet normalization, meaning this is where they were buying bonds and mortgages to keep rates artificially low. They've stopped that program, but they didn't say they're going to start it again, but kind of kept that open. So the markets like this after the Federal Reserve, the mortgage rates improved, stock market increased, everybody was happy. Then Friday came and the employment report for January came out. The report was fantastic, almost double the jobs created than what was expected. So now this is a big report and it moves markets. So now the bond market and the mortgage rates increased on this news, mainly because one, it was a very good report, showed a lot of jobs created, and also there's an inflation component within that as weekly earnings. This had a pretty good increase from 3.2% to 3.5% in wage growth looking at that. So that can be inflationary and what causes what is looked at as wage pressure inflation. So with that did, I guess, mitigate some of the euphoria that we had from the Federal Reserve earlier in the week. The good news was rates still, as the week went, did improve, just not as much after the unemployment report. So that's a wrap for this week. Thank you very much for watching. If you need anything, I'm here to help. Thank you.